Hey, how you doing? It's Clayton Tierney from the First Home Buyer Club. 100 lessons in 100 days. Day 25, lesson 25. First Home Buyer Club most commonly asked questions. So I've got 12 that we're going to work through today that get come up quite frequently, and I want to answer them in greater depth today. So the first one is, how come the First Home Buyer grant is only applicable to new homes? Or more importantly, what we get asked all the time is, why don't you allow it for old homes? So the first thing is, it's not us that actually gives out the money, right? It's the government. It's a decision made by the government. One thing that you need to be aware of, though, when you buy an old house, there's not many people that earn money in that transaction. And so the First Home Buyer Grant, the Home Builder Boost, the loan deposit scheme, these are all incentives brought out to stimulate the economy and entice people to purchase and get the construction industry going. So, when the build of a new home occurs, there's probably somewhere between 20 to 30 different trades and businesses that make money, from the fast food to the furniture places to all the different trades inside the house. That's the reason why the government is bringing this incentive out for first home buyers and for new homes. Are you restricted in areas if you're a first home buyer? No, you can go wherever you want. So as long as your budget allows it and there's actually land that exists, we can take you wherever you want to go. How do we get cheaper interest rates? Well, the easiest way to think about the cheaper interest rate is the bigger your deposit, the cheaper the rate. The less the deposit, the bigger the risk, and obviously the bigger the rate. Does that mean that you should hold off and save another 2, 3, 4, 5 years to have a bigger deposit up in order to get the lower interest rate? No, because you got to think about this. Most people are paying anywhere in the vicinity of $20,000+ per year in rent. Now, the difference between you buying a home with 10 or 15 grand compared to you buying a home with 30, 40 or 50 grand deposit, it may be 1.5% like max. Now you go think about that. On a $400,000 loan, that might only save you $4,000 to $6,000, yet you're spending 20 grand each year. My suggestion was you get in and then you start knuckling down and paying off that home, or using the offset account to bring it down faster. And every 12 months, you just pester the bank for a cheaper rate. They'll give it to you. Can we use the grants as deposit? There are certain banks who allow you to use the First Home Buyer Grant as your deposit. Unfortunately, contrary to what the Courier Mail is advertising at the moment, the Home Builder Boost can't be used as a deposit, and that can be backed up if you jump on the Treasury website or go through any of the Home Builder grant websites, and he'll say that in the most commonly asked questions, and it also breaks it down. Will that mean that we won't be able to use the Home Builder Boost towards a deposit at any point? I'm unsure. I'm sitting on the fence on that one, because as of last week, they introduced a pre-approval option for the Home Builder Boost. So for me personally, I'm thinking maybe they're going to try and introduce it, but as everyone's experienced, that's the Home Builder Boost came out in, I think, June the 3rd. We still haven't got massive clarification on it. Don't expect that answer is going to happen overnight. Loan deposit scheme, Home Builder Boost. I've been told that it doesn't. You don't have to be an Australian citizen to get either of these. That's incorrect. So firstly, with the loan deposit scheme or the low deposit scheme, the amount of applications has actually exhausted what was allocated for it. It's not to say that you couldn't get any moving forward, but every one of the 10,000 that was allocated is already being used up, and there's going to be some that may not get finance or don't reach that 3-month period that actually come back. But don't plan on purchasing a home with a loan deposit scheme if that's what you need to get across the line. The same as the Home Builder Boost. You must be an Australian citizen to apply and be eligible for it. There's one way around it. If one partner is an Australian citizen, you can try the spousal guarantor option. There's one or two banks that do that, but as a whole, everyone that's on the title needs to be an Australian citizen, not one Australian citizen. What's the good things about a parental guarantor? Firstly, you can avoid mortgage insurance. Secondly, you can get in with a lower interest rate. And third, you can get in with little to no savings. Now, does that mean that you just milk that loan for 30 years and have your parents on it? No. What we focus on with all our clients is that let's plan on this only being a 2 to 3 year period max. We don't want your parents on there for life, right? So especially if you're an Australian citizen at the moment, you get the $15,000 first home buyer grant, you get the $25,000 home builder boost. Let's get there, use that money to bring down that mortgage. Probably the easiest point to get them off the mortgage is once you reach the 90% or you have 10% equity. The best way is at 20% because then you don't have to pay mortgage insurance. However, you can release them off title at 90%. You just need to apply for again, and you'll have to pay a little bit of mortgage insurance. But the money that you could save over those years would just be massive. How do you pay for the construction of your new home? You'll pay interest-only repayments on your new home when you build it. So it's not all of it at once, and it's only at stages, right? So you don't pay the builder 100% of what you're going to own for the home at the start. Once they reach each stage, you pay them for the previous stage's work, and then they continue on. By the end, it is actually not as bad, and it's a lot cheaper than expected. Can you make designs to houses, or are you restricted with certain things? No, we can customize every house and land package to your needs and budget, from actually looking for the perfect block of land in the perfect location through to redesigning a house plan to suit you and your family's needs. We can ensure that it happens. My bank said no. How come you're saying that this could work? Firstly, there's a lot of banks out there, right? And every bank has different policies and different rules when it comes to their lending and what they'll allow. I always grew up with a Dolomite account. I'm not going to name the bank, but obviously everyone that's had a Dolomite account will know what they're talking about. A great bank for a lot of things. However, they're very hard for a lot of first home buyers to get in because of the rules that they put in place. So don't be put off by going to your bank and they say no. Explore your options. That doesn't mean, though, that you apply for 8 different home loans at once, because the banks will claw onto that and wonder what's going on and you'll get declined. What I would suggest, and it leads into the next question, what would you recommend banks or brokers, especially for your first home? Definitely go see a broker. They'll have access to multiple different lenders so you can make the right decisions, but more importantly, they'll do all the hard work for you. So instead of you putting it off or going to the wrong bank and getting told no or not getting the best rate, they'll do all the hard work, and hey, you don't have to pay them. The bank pays them because they would have to pay staff to do that work anyway. So don't feel that you're going to be paying extra as a result. New versus old, what do you recommend? Well, I guess it comes down to you and your personal preferences. For me, as I joke around all the time, I'm not a tradesperson, right? So I am not getting in there with the hammer and the nail and fixing things up. And a lot of feedback I hear from friends that do renovate when they're not experts is that it takes a lot longer than expected. It takes a lot more money than expected. And as soon as you fix one thing, you got to fix all these other different things that you didn't expect. And it's just a cycle. Not to say that new homes are always the best. There are some great opportunities around. You just need to know where to look. And if you negotiate the right deals along the way, you should be in front. The best thing about new is you don't have to fix anything up front because it's all under warranty. And then the last question I get asked quite a bit is, I'm not quite sure about the future, or I heard interest rates are going to go up. We might hold off. It's probably not the right time. the one thing I want to talk about with interest rates, because it's obviously everyone talks about it. Oh, interest rates might be low now, but in a couple of years they're going to go up, and then you're going to be in trouble. Firstly, the banks wouldn't assess you and give you finance without adding a buffer, right? So if you're borrowing now, it doesn't mean that you're at 100% capacity, because they're adding the buffer. The second thing is, you got to think about this. If you're renting a home or owning a home, and in a couple of years' time, interest rates go up, I'm not to say they're going to stay at this point for the whole time, but they're not going to jump from 2 to 3% to 12% in a couple of years, right? But if they go up, interest rates go up, what is the investor or the owner of your rental property trying to do to the rent prices to cover the costs where he's starting to lose out? Don't for a second think that the owner of your home is not going to be trying to increase the rent and pull back some of the interest. It's the same as if you think about it, just buying milk. Milk might cost a certain amount to produce. All of a sudden, if it costs more to produce, instead of buying $1 per litre at Coles or Woolworths next year, you're going to be paying $1.05, $1.10, because at the end of the day, it's the end user that wears those costs. No matter if you're renting or owning, if interest rates go up, your costs are going to go up. All right, guys, I hope I answered all the questions. If you've got questions I haven't answered, put them in the comments below, and we'll get on to them. All right, thank you. Have a good day.